Namaste. Good morning, friends. We are continuing from wherever we left in the last class with regard to uh, with regard to computation of annual value. With regard to computation of annual value, we are continuing wherever we left in the last class. How to compute annual value? Four factors are taken into account for computing the annual value: municipal value, fair rental value, standard rent, actual rent. I will compare MV and FRV, determine whichever is higher. That answer I will compare with SR, whichever is lower. That answer with AR, whichever is higher. The answer of step 3, GAV. NAV is equal to GAV minus MT, municipal taxes paid. Only if it is paid, it is allowed as a deduction. Whatever is paid is allowed as a deduction. Whatever is paid is allowed as a deduction. And please understand that MT paid, that is municipal taxes paid, okay, will be allowed only if it is by the owner. And past years accumulated and paid now will be allowed fully, whereas whatever is paid in advance, I will not allow. We did some questions. Then we started understanding the special cases. At that time only there was a small technical snag we faced. Okay. Vacancy, where a property has been let out but remains vacant for part or whole of the year. The mode of computation is as follows. The answer of step 3 will not be known as GAV, it will be known as expected rental value, and I will take the 12 months actual rent. The actual rent will be taken for entire 12 months. DAV is equal to PRV minus vacancy allowance, which is nothing but rent per month into number of months of vacancy. Rent per month into number of months of vacancy. We know what it is, NAV. So there is one additional step that we go by, okay, where we are going to compute expected rental value. From there, reduce the vacancy allowance. From there, reduce the vacancy allowance to arrive at what is known as GAV. From there, we know how to compute NAV. So these are known as, we start with the special cases of computation of annual value. Okay. I am leading to your practical notebook. Question number 3 in page number 74. Question number 3 in page number 74. Selvi Vani is the owner of a house which she lets out. She gives you the following particulars relating to her house. Determine the net annual value. Municipal value, fair rental value, standard rent, actual rent 12,000 per month, which means for 12 months there itself write and keep 1,44,000. The house was vacant for 1 month during the previous year, and the municipal taxes paid is 40,000. And the municipal taxes paid is 40,000. Okay, okay, friends. MV or FRV, whichever is higher, so I will hit at 1,40,000. That answer or standard rent, whichever is lower, I will hit at 1,20,000. That answer or actual rent 1,44,000, whichever is higher. So my expected annual value ERV, my expected annual value will be 1,44,000 less municipal less sorry vacancy allowance. Less vacancy allowance. The question says the house has remained vacant for 1 month. So rent per month into number of months of vacancy. So 12,000. I get my gross annual value. I get my gross annual value. Okay, 1,32,000. Okay, less municipal taxes paid. Municipal taxes paid. The question says 40,000. Therefore, net annual value. Therefore, net annual value is 92,000. Repeating the provisions. Okay. Expected rental value 144. How I found out? I will take actual rent for 12 months. 90, 140, whichever is higher. 140, 120, whichever is lower. That answer with 144, whichever is higher. So 144 prevails. That is my ERV. Less vacancy allowance leads me to gross annual value. Less municipal taxes paid leads me to net annual value. Leads me to net annual value. Do the fourth question. Do the fourth question, friends.
Sir,
Yeah.
இந்த சாப்டர்ல
Hmm.
ஓனர்ஷிப் ஃபார் ஹவுஸ்க்கே டாக்ஸ் கட்டுறோமா இல்ல இன்கம் அரைசிங் ஃப்ரம்
Income arising from house property.
ஓகே
Sir,
Go ahead.
in case நான் தான் ஓனர் பட் ஆனா என்னோட மதர் தான் ரெண்ட் ரிசீவ் பண்றாங்க அப்படின்னா யாருக்கு சார் டாக்ஸபிள் ஆகும்?
You are only taxable.
Okay, sir.
It is as if you are receiving the rent and giving it to your mother. What's your answers?
Sir, I'm getting GAB as 66,000,
Yeah.
49,875,
Okay.
42,000,
Okay.
62,000,
Okay.
and 4,000.
Check the second house.
Second,
Sir,
one
I'm getting for the
51,875.
second house 51,875.
Yeah, that's the answer. Otherwise, your answer is right, friend.
So for the
Sir,
H
I'm
file,
getting, sir.
sir, H file full total 12 months
Yeah,
vacant,
it's a
sir.
very
So there
rare
is no
case. It's
out.
a very rare case where last year I had let it out for a lesser value. They take it as a current year actual rent also. Practically, that will not stand. Just for theoretical purposes, it might be a correct case. Practically, it will not stand. Don't worry.
Sir, if the house is vacant for 12 months, then no rent will be charged.
Actually, yeah. This is just theoretical. Practically, it will not be changed.
Okay.
So, friends, we are getting 66, 51,875, 42, 62, and 4,000. Anyone not getting me or any property you are not getting, please ask me.
So vacancy allowance for P2.
For P2,
Yeah,
P2 is vacant for 1.5 months, I believe. P2 is vacant for 1.5 months. 57,000 is for 12 months. What is for 1.5 months?
okay, sir.
Again, 66, 51,875, 42, 62, and 4,000. I hope all of you have completed. I go to case 2. Case 2, in case of unrealized rent. In case of unrealized rent. Case 2, in case of unrealized rent. My dear friends, rent due but not received is known as unrealized rent. Rent due but not received. Repeating, the rent is due but it is not yet received. It is known as unrealized rent. Rent due but not received is known as unrealized rent. Okay, right? It should be bona fide. Bona fide now. It should be realistic. One of our friend was asking us. Suppose let us take her own example in the reverse manner. Her mother is the owner of the property. she lets it out to her own daughter. She lets it out to our friend who is her own daughter and say that the rent is not realized. That is not acceptable, right? It is not a bona fide let out. Okay, it should be bona fide. It should be true and fair. Okay, okay. The unrealized rent will be reduced from the actual rent received or receivable. In our format, okay, we have MV, FRV, SR, AR minus UR. Okay, we call it as AR minus UR, unrealized rent. That is actual rent minus unrealized rent. AR minus UR. And then I will go for the same steps. I am repeating, my dear friends. Unrealized rent means rent due but not received. And there is a remote chances only the tenant is not going to pay. So what should I do? I will reduce it from AR. AR, I will take it for 12 months minus whatever is the unrealized rent. So what will happen now? Then go for the steps. Step 1, compare MV, FRV. Step 2, that answer with SR, whichever is less. Step 3, that answer with net actual rent. That is after reducing. Whichever is higher will become either ERV or GAV. Minus vacancy allowance, minus municipal taxes paid. So, the unrealized rent will not go into the steps. It will only go to reduce my actual rent received because that rent is not going to be received. So, the word actual rent is wrong there. Actual rent is only going to be after reducing the unrealized rent. Sri Ramesh is the owner of a property, gives you the following particulars: MV, FRV, AR 21,000 into 6 plus 25,000 into 6. AR 21,000 into 6 plus 25,000 into 6. May I know the amount? 21,000 into 6 plus 25,000 into 6.
2,76,000.
So write it and keep here. Okay, 2,76,000. Municipal taxes paid 20,000. Property rent remains unrealized for February and March. Determine NAV. So it is a straightforward question. Not even we have our standard rent. It is all the more becoming simpler. To your practical notebook. For your ease of understanding, I will write it fully this time. Okay. Municipal value is going to be 2 lakhs. Fair rental value is going to be 2,40,000. Actual rent minus unrealized rent. You all told me 2,76,000 minus 25,000 into 2. Last 2 months rent is remaining unrealized. 2,76,000 minus 50,000. Okay. So this has remained unrealized. Okay. So expected rental value will be, okay, whichever is higher, because standard rent is not there, it becomes all the more simpler. Expected rental value is 2,40,000 less vacancy allowance. In this question nothing is there, vacancy allowance less empty paid I think is 20,000. Okay, so I get a net annual value. Of, sorry, it should be 20,000. 2,20,000. I get a net annual value of 2,20,000. Net annual value 2,20,000. Any doubt, please ask me. So my dear friends, okay, the next question, please. Question number 6 in page number 75. Question number 6 in page number 75, please.
One lakh 47,000, 161,000, and 1,61,000.
Okay, friend, good. Who's that?
Bharti.
Bhakti. Okay.
I'm also getting the same.
Perfect, boss. Perfect. How is office going on, Bharti?
Well, sir. Hello.
Yeah. Ensure the lot of safety, yeah. Be very, very careful. Be very, very safe.
Yes, sir.
Yeah.
Yeah.
So, Manan, you're also going to office, right?
Yes, sir.
Please ensure proper safety, okay?
Yes, sure, sir. We are wearing a mask and all.
Yeah, even
Should be.
inside the office, please ensure.
Yeah.
Sir, if we don't wear mask and sit, they penalize us rupees 5,000.
Okay, good. I'm happy somebody's doing that. So, friends, that's what is the answer I am also getting. Okay, friends, the actual rent minus unrealized rent comes to 154, 140, and 154. Okay, and these are my ERV and these are my vacancy allowances where I hit at this answer. Any doubts, ask me.
Sir,
Go ahead with your question, sir.
how is this FRV and MV are calculated, sir? Because in some cases, FRV is greater than actual rent, so it's like we are paying tax more than what we are receiving, right?
Very good, Raja. Your question is good. Raja, two adjacent houses are there. Two adjacent houses. And both the houses for say have the same square feet, same type of construction, same type of amenities, everything. One house is fetching a rent of 30,000, another is given in a rent of 25,000. The department feels that the other house should also get 30,000 fair rental value, rent of property of a similar rent of a similar property in the same locality. When one house is fetching 30,000, why is the other person letting it out for 25,000? Is there a possibility that he is not declaring that 5,000? That's why they have kept that.
Okay, sir, but he may be in desperate need of money, so like he would only.
He can prove to the department and get the benefit. This is basis of computation, but in the practical cases, he can prove. And actually, even if it is two adjacent flats of same location, of same construction, they might not be similar.
Okay,
Some
sir.
amenities might be extra in one, so it will not be compatible.
Yes.
The kitchen, somebody has a better chimney. The master bedrooms are painted with a concept, then that means they are not similar. So slightly bookish concept.
சார் அதே மாதிரி அந்த ஃபேர் வேல்யூல எந்த வீடு ஃபேர் வேல்யூவா எடுத்துக்கிறது இருக்குல்ல சார், கம்மியா இருக்கிற ரெண்ட் வீடு கூட ஃபேர் வேல்யூவா எடுக்கலாம்.
இது ரெவென்யூ சீக்கிங் law. Okay, back to your theory notebook, case 3. Back to your theory notebook, friends. Case 3. Self-occupied property. Self-occupied property. What is self-occupied property? The owner himself resides in the property, or his son, daughter, somebody is residing. Self-occupied property. Okay. There is another circumstance also. Suppose I have a house in Chennai and my office transfers me to Bangalore or Mumbai. I don't let out my house, I lock it, because anytime I can come back and stay, etc. So I don't want to let out, I lock it. That is also known as self-occupied. Okay, where the owner resides or the property is remained locked up, then it is known as self-occupied property. Where the owner resides or the property is remained locked up, then it is known as self-occupied property.
Sir, then what's the difference between vacancy and the second case in self-occupied property?
Yeah, what is the her question was, what is the difference between vacancy and the owner locking up the property? Vacancy, my intention is to let out but no takers. self-occupation. My intention is not to let out, but use it for my own purpose. Big difference. So, where the owner resides or the property is remained locked up, then it is known as self-occupied property. Okay, then it is known as self-occupied property. NAV of a self-occupied property is nil. Net annual value of a self-occupied property is 0. Net annual value of a self-occupied property is 0. Okay. Henceforth, if I use the words benefit of self-occupation, what do you mean by the word benefit? Benefit means what the assessee gets. The assessee need not pay any tax for self-occupied property. Why? Because NAV of a self-occupied property is 0. So when we use the word benefit of self-occupation, that means NAV is 0. That means NAV is 0. Net annual value of a self-occupied property is nil. That is the benefit assessee gets. From the financial year 1920, this is amendment for you, 1920, two properties can claim the benefit of self-occupation. This is the biggest benefit you are getting. From the financial year 1920, the benefit of self-occupation is available for two properties. Till financial year 1819, benefit of self-occupation is only for one property. Till financial year 1819, only one property will be taken as nil. That is, Mr. X resides in one property and another property his son is residing. I cannot claim for both. I can claim only for only one. From financial year 1920, the law is considerate enough to give the benefit. What is benefit of self-occupation? NAV being nil. So from financial year 1920, the benefit of self-occupation can be claimed for two property. Case 4.
Sir,
Yeah, I am listening.
then for the third property, how do we calculate NAV?
Yeah, 1 minute 11 seconds. Case 4. Deemed to be let out. Case 4. Deemed to be let out. So our friend was asking just the question, what if I have three properties and all the three properties are self-occupied? What if I have three properties, all the benefit of self-occupation is available only for two properties. The third property is deemed to have been let out. The third property is deemed to have been let out. Where assessee claims self-occupation for more than two properties, where assessee claims self-occupation for more than two properties, then The benefit of self-occupation. What is the benefit of self-occupation? NAV being nil. Then the benefit of self-occupation is restricted to two properties. In other words, the other property will be deemed to have been let out. The other property or properties, if you have 4 or 5, the other property will be taken as deemed to have been let out. The other properties will be taken as deemed to have been, supposed to have been let out. Okay. Normally, what is the mentality of the assessee? Those properties which has a higher NAV, those properties which has a higher NAV will be treated as self-occupied, and the one which has lower NAV will be taken as deemed to be let out. Normally, the mentality will be to pay lesser tax. So, suppose if there are 3 properties, I will compute the NAV of all the 3. That whichever property's NAV is higher, I will say, sir, the last self-occupied, sir. So that the third property, which has a lower NAV, will be deemed to have been let out.
Sir, in addition to this, he will also be paying property tax, right?
That is to the state government. Adada empty minus pandrene. My NAV is GAV minus municipal taxes. Property tax is known as municipal tax.
Okay.
Sir,
Go ahead.
sir, we pay maintenance for the thing we rented out, no, sir. So it will get minus from the NAV, sir.
Once more.
Sir, maintenance charges are paid for flats, no, sir. We rented out the property. It would get minus from NAV.
Aram se wait karo. We will talk about
Okay,
this in
sir.
the next class. I got your question. Don't worry. Friends, I made a small mistake. Okay. So, having retained the old question, can you write a H3 here, friends? Can you write after H2, can you write a H3 here? I'll give you the values. I will give you the values. Can you write a H3? Municipal value 40,000. Municipal value 40,000. Please write a H3 here. Okay. Municipal value 40,000. Fair rental value 48,000. Fair rental value 48,000. Standard rent 42,000. Standard rent 42,000. Empty paid 10,000. Empty paid 10,000. Repeating 40, 48, 42 and 10. 40, 48, 42 and 10. Compute the NAV of all 3 properties first. Okay. Discuss as to which house should be treated as let out. The question is discuss as to which house should be taken as let out? All three are, okay, I change it to 3, okay, all three are self-occupied properties, all three are still, so we need to find out which is better to be let out, which is deemed to be let out, okay. Gross annual value of the three properties. First property, 24 or 34, whichever is higher, 34, 34 or 30, whichever is lower, 30,000. 36, 36, so 36 stands, 36, 45, again 36 stands. 40, 48, 48 stands, 48, 42, 42,000 stands. Okay, conclusion. Property 2 and 3 should be considered as self-occupied. Property 1 deemed to have been let out. Property 1, if that property which has a lesser NAV will be taken as let out. I hope this is clear to you. I hope this is clear to you. Okay. So, whenever I say benefit of, okay, when I consider these two as 0, for example, I'm saying 0, 0, you will be paying tax only for 24,000. Okay. If I consider these two as 0, you will be paying tax for 32,000. So, always assessee will prefer whichever value NAV is higher to be self-occupied. The ground rule is benefit of self-occupation can be claimed only for two properties. Back to theory notebook. Partly self-occupied, partly let out in terms of period. Partly self-occupied, partly let out in terms of period. Friends, a property for the first 6 months I am self-occupying, rest 6 months I let it out. For first few months, a part of the period, a part of the year is self-occupied. Other part of the year is let out, partly self-occupied, partly let out in terms of period. Partly self-occupied, a part of the year self-occupied, other part of the year it is let out. Partly self-occupied, partly let out in terms of period. Where a house property has been let out for part of the year and self-occupied for the other part of the year, then this is the provision, my dear friends, deemed to have been let out for whole of the year. The law just says if you partly self-occupied, partly let out in terms of period. If a house has been let out for part of the year, self-occupied for the other part of the year, then the law says it is deemed to have been let out for whole of the year. The law comes little stringent here, little difficult to comprehend, that it has been deemed to have been let out for whole of the year. What does this mean? Municipal value, standard rent, municipal taxes will all be taken for whole of the year. Okay? When I was doing my articleship, when I was writing my CA examinations, the provision was, suppose municipal value is, let us take 90,000 and it has been self-occupied for 6 months, let out for 6 months. How we compute is municipal value for 6 months. Standard rent for 6 months. Like that we do it for 6 months. Ana inga, the log subsequently got it is deemed to, so you have to take it for whole of the year. Okay. However, actual rent is only for actual let out period. That is, we all know actual rent can only be for actual let out period. Actual rent, that will not change. That will, the word itself is actual rent. So actual rent will be only for actual let out period. So where a house property is self-occupied for a part of the year, let out for the other part of the year, then it is deemed to be let out for whole of the year. Municipal value, standard rent, municipal taxes, ellame I will take it for whole year. Actual rent for the actual let out period, then go for the steps, I will get that. Question number 8. Venugopal owns a house property. Municipal value is 84,000. During the previous year, property was let out for 8 months, self-occupied for 4 months. Compute NAV in each of the 3 cases. Case A, in the let out period, rent for first 6 months is 9,000 and 10,000 for the last 2 months. First 6 months. Okay, first 6 after this months. Okay, first 6 months is 9,000 per month and 10,000 per month for the last 2 months. From B, property is let out for 12 months for all 8 months. C, property is let out for 10 months and has remained vacant for 1 month during that period. Case A, case B, case C. Go ahead, my dear friends. I'm also getting the same answers as Darshit was saying. Okay, it is. I get a MB of 84, 84, 84. Actual rent for as 74 for the first case, 96, and third case 18. So I get ERV, whichever is higher, 84, 96, 84. In the last case, there is a vacancy allowance of 10,000. So 84, 96, and 74. Eighty-four, 96, and 74. Case 6. Back to theory notebook. Case 6. Partly self-occupied, partly let out in terms of units. Partly self-occupied, partly let out in terms of units. What is this, friends? One house is there, ground floor owner is occupying, first floor he has let it out on rent. One house divided into 2 units. Unit 1 ground floor, unit 2 first floor. One unit self-occupied, another unit let out, partly self-occupied, partly let out. It can be even divided into 3 units, 4 units, 10 units, however. Part of the house self-occupied, part of the house let out in terms of units. So how to compute? Because the problem is municipal values, standard rent, இது எல்லாமே for the whole house only you will get it. You will not get it for the unit, you will get it for the whole house only. So the law says each unit will be treated as a separate house property. Each unit will be treated as separate house property. Benefit of self-occupation, where NAV is 0, is available for 2 units. Other units, either it should be taken as let out or deemed to be let out. And all these common aspects should be divided amongst the units based upon floor area. All these common things should be divided upon the units based upon the floor area. So friends, where one house is divided into multiple units, ground floor, first floor, ground floor, first floor, second floor, ground floor, part A, part B, first floor, part A, part how many ever units you want, you can. Where one house is divided into multiple units, each unit shall be treated as a separate property. Okay, where one house is divided into multiple units, each unit will be divided into a separate property. Each unit will be divided into a separate property. One unit will be treated as sorry, benefit of self-occupation. Till last year it was 1 unit, so it takes time to set in. Sorry. Benefit of self-occupation can be claimed for 2 units, and other units shall either be let out or deemed to have been let out. Okay, benefit of self-occupation can be claimed for 2 units. Other units, either it is let out or deemed to have been let out. Either actually it has been let out or supposed to have been, deemed to have been let out. For this purpose, MV, that is municipal value, standard rent, municipal taxes, later you will study this, interest. For this purpose, MV, SR, MT, you have not yet studied interest, we will later study that, and interest will be divided between properties based on floor area. Based on, okay, popularly we call it as plinth area, that is nothing but floor area. For this purpose, MV, SR, MT and interest will be divided based upon floor area. Where one house is divided into multiple units, each unit shall be treated as a separate property. Benefit of self-occupation can be claimed for 2 units, and the other unit either let out or deemed to be let out. And based upon floor area, change all the common things. This is known as partly self-occupied, partly let out in terms of units. Question number 9. Question number 9.
Sir.
Raja?
சார் அப்போ ஒரு ஹவுஸ்ல 3 ஃப்ளோர் வச்சுட்டு தனியா இன்னொரு ப்ராப்பர்ட்டி வச்சிருந்தா சார்?
That means you are having 4 houses. Each unit will be treated as one property. So house 1 you have 3 units means 3 houses. Other than that you have 1 house means 4 houses. You can claim the benefit for 2 units or 2 houses. Remaining 2 will be let out.
Okay.
Each unit is a separate property.
Sir, can you show
But
theory?
sir, where
First our can you show, what was you asking? Can you show?
Can you show the theory for a minute?
Yeah, sure. And what was your doubt, Bharti, or some whoever is asking?
sir, where one house is having 3 units and all the 3 are occupied by the owner himself, then it will be treated as one house only.
How do you say it is 3 units?
Yeah, that's what floor wise.
I'll tell you, this is where that whole concept, the beginning I was discussing something comes into play. If you ask me, sir, how do you call it as a unit? You have in your house ground floor, first floor. Are they 2 units or single unit? This is where I told you in the beginning itself, or the Supreme Court or a judgment said that if there is a kitchen in every floor, okay, other things they not, okay, இப்போ first floor la you only have 1 hall, 3 bedroom, Ground floor has a hall, 1 bedroom, 1 kitchen. It is only 1 unit. Because first floor does not have a kitchen. Suppose ground floor also has kitchen. First floor also has a kitchen. I will consider it as 2 houses. That is how the division takes place, Bharati. And if all the 3 floors has kitchen, all the 3 floors are occupied by the owner, it is 3 units, 1 unit is deemed to be let out.
Okay, sir.
Question number 9. Sheshadri is the owner of one big house. The house has 1 unit in ground floor measuring 1200 square feet. First floor is divided into 2 units, 600 square feet each. Second floor has 1 unit measuring 800 square feet. The total municipal value is 480. So how much totally? 1200 plus 600 into 2, again 1200. So 2400 plus 800, 3200 square feet is the total value of the house. I am repeating, 1200 plus 600, and it is per unit each. Okay, 600 is each, and I have 2 units there. So 1200 plus 1200, 400, and the second floor is 800. Totally 3200 square feet, and the total municipal value is 4,80,000. Okay, as a whole, for the whole house is 4,80,000. Ground floor is occupied by Seshadri. 1 unit in first floor is occupied by him. We can claim that as self-occupied. The other unit of equal dimension is let out for a monthly rent of 7,500 per month. The second floor is let out for 8,200 per month. During the year, the second floor was vacant for 2 months. Municipal taxes again for whole of the property is 4,80,000. Read through. So friends, there are 4 houses. Each unit is a house. So 4 houses. Unit 1 and Unit 2, I will not even work out because I know NAV is nil. Why should I work out? Self-occupied property na work out பண்ணாதீங்க. NAV is nil. You can start NAV is nil. You need not compute GAV minus municipal taxes, NAV. However, this is nil illa. NAV is 0. I need to work out for Unit 3 and Unit 4 only. I need to work out for Unit 3 and Unit 4 only. That is 1 unit in the first floor and the second floor. This only I needs to work out. I need not work out for ground floor and 1 unit of first floor because both are self-occupied. NAV is nil. So I will divide the MV. I have the actual rent. I will get ERV minus vacancy allowance minus the divided municipal taxes will give me what is the NAV of house property 2 in first floor and house property 3 in second floor and house property 4. Both these things will get. Go ahead, please.
சார்
Raja.
அனைத்துக்குமே கம்ப்யூட் பண்ணிட்டு இதுல என்ஆர்வி ஹையரா என்ஏவி ஹையரா இருக்கோ அத பெனிஃபிட்டா கிளைம் பண்ணலாம்ல சார்?
ராஜா, 2 house actually let out. And the benefit எப்போ when I say all the 4 units are self-occupied. அப்பதான் the benefit. When 2 houses are actually let out, you should take 2 houses are actually self-occupied. அதுக்கு nil. 2 houses are actually let out. For that, those 2 houses we should complete.
Okay.
This is what that is house property 1 and 2, that is ground floor and first floor unit 1, the self-occupied, NAV will be nil. So house property, okay, is with regard to first floor unit 1 and second floor. These are all the square feet, okay.
Sir, I did not get the answer for the first one.
You need not get an answer, it's nil. Self-occupied property.
Unit 2.
Unit?
The below one.
First floor 1.
Yeah.
Yeah, I'll get you.
First.
Municipal value is 4,80,000 into 3,200 into 600. Are you getting 90,000? Municipal value 4,80,000 divided by 3,200 into 600, 90,000. Rent is also 90,000. Whichever is higher becomes the ERV, no vacancy, and municipal taxes will be 48,000 divided by 3,200 into 600. 48,000 divided by 3,200 into 600. I'm getting 9,000, leading me to an NAV of 81,000. Leading me to an NAV of 81,000.
Okay, sir.
Similarly for house 2. House 2, I will have 120, that is 4,80,000 divided by 3,200 into 800, or 8,200 into 12, whichever is higher, minus 16,400. 8,200 into 2, 16,400 vacancy allowance. Rent per month into number of months of vacancy. So I get my GAV less empty paid is my NAV. Keep your theory notebook away for, practical notebook away for some time. We are going to spend it on theory notebook. Case 7. Case 7. Property located outside India. Property located outside India. Property located outside India. Neela, are you able to unmute yourself, Neela? Not a problem. Sienna, are you able to unmute yourself? Sanjay, are you able to unmute yourself?
Yes, sir.
Yeah. To whom is it taxable if the property is located outside India? Which assessee it becomes taxable?
Sir, on the basis of what you're asking, sir, The residential status.
Yes, that's beautiful. Yes, on the basis of residential.
For ROR, sir.
That's beautiful. Because for ROR, global income is taxable. It is only taxable for ROR. Sanjay, my next statement goes like this. However,
Yes, sir.
for RNOR and NR, it will be taxable if, fill up the blank. However, for RNOR and NR, it will become taxable if anybody?
Sir, if they satisfy the receipt test.
So if rent is received in India, that is the answer. I take that answer. If the rent is received in India, friends, where property is located outside India, where property is located outside India, okay, where property is located outside India, then it becomes taxable for ROR. For ROR, because global income is taxable. Wherever he earns, however he earns, it is taxable. In case of RNOR and NR, in case of RNOR and NR, it becomes taxable if rent is received in India. If rent is received in India. For RNOR and NR, it will become taxable provided rent is received in India. Okay. The basis of computation is the same as if the property is located in India. The basis of computation is the same as if the property is located in India. As if the property is located in India. The basis of computation is the same as if the property is located in India, my dear friends.
Municipal value la எப்படி சார் determine பண்ணுவாங்க?
Raja?
Municipal value எப்படி சார் determine பண்ணுவாங்க outside
That's
India?
what I am also coming to tell you. Every country will have agreement. I will write to the country and ask, in your country, what is the municipal? Every country has property tax, property value. Every country, when you transfer land and building, you are going to the register office. Okay, so actually these are now available in the open net itself. So municipal value, I will obtain the MV, FRV, SR might not be there, MV, FRV, municipal taxes. So the basis of computation is the same as if the property is located in India. I will get all these details and compute. For this purpose, foreign currency will be converted into Indian currency by adopting telegraphic transfer rate, which is popularly known as bank rate, my dear friends. Telegraphic transfer rate, that's what they call it. Technical word, practical or colloquial word is bank rate. RBI will determine that.
So the taxes paid in that country, is it allowed as an exemption?
Yes. 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 Case 8. Case 8. Composite rent. Composite means together. Composite means together. Rent is not only for the house property. Understand the case. Rent is not only for the house property, it is also for some amenities. I am letting out my house property along with my furniture. I am letting out my house property along with a lot of interior designs. I say rent for property 15,000, rent for furniture and decors 5,000. Composite rent is 20,000. The law says, the title of this chapter is clear: income from house property. Income from house property. So the law says, income from house property is taxable in this chapter, and income from amenities will not be taxable under this chapter. Not at all taxable to Solala. Income from house property is taxable in this chapter. Income from amenities is not taxable in this chapter, but some other chapter. It will be taxable in another source, other source chapter. Okay? Where such a split is not possible. That is, I don't know how much for house property, how much for amenities. The law says the whole of the rent is taxable under other sources. Which means the law says mandatorily split. If you split only, I will tell you how much is taxable IHP, how much is taxable other sources. If you don't split, whole of the rent will be taken to other sources. Where the rent is split between them, property rent is taxable under IHP, this chapter, and amenities rent in other sources. Where such a split is not possible, where such a split is not possible, then the whole of the rent is taxable under other sources. Then the whole of the rent is taxable under other sources. Case 9. Property used for the purpose of own business or profession. Property used for the purpose of own business or profession. Sir, please understand, I am carrying on my chartered accountancy profession from my house. A person is carrying on his lawyer or doctor is carrying on his clinical business from his house. Property used for own business or profession. It is not at all in this chapter. That will never enter this chapter. It goes to the next chapter, which is business or profession. This is not dealt with in this chapter. It is dealt with in section 30 of the next chapter only. Friends, this is an amendment. This is an amendment. Property held as stock in trade. Property held as stock in trade. What is that stock in trade means? Friends, Vijay Shanti builders, Akshaya builders, or whoever is the builder, okay, various builders, they construct thousands of apartments. 20-30 apartments they are unable to sell. 20-30 apartments they are unable to sell. So in their books it will be appearing as stock in trade, because for them that is goods. Buying, constructing and selling house is their business, so it will appear as stock in trade in their books. The big question is, it has, at least if it is sold, some sales income will come. Okay. If it is held as stock in trade and let out, at least income will be. It is held as stock in trade, but it is remaining idle. The most dangerous thing is always an idle asset. As bad as an idle mind. You all know, I need not tell you how an idle mind works. It's a devil's workshop. Okay? God has created the ability to mind, to think at a very, very, very different dimension. It thinks very powerfully, very good dimension. But unfortunately, if it is kept idle, it cannot, you cannot stop its thinking. It will still continue to think, and it will think crookedly. Okay? It will think very crookedly. So unless you channelize, you give your, if you are silent, if you are not doing anything, you know what your mind does. It will imagine some wild things which is not even under your control. It will go on an imagination at a very, very high scale. What will happen if this happens? What will happen? Okay? Couple of days back, my friend calls me and asks me, what if 130 crores of us, the Indian population, every one of us get corona? How will we have hospitals? How will we go for oxygen? Okay, how many intensive care unit are there in our hospitals? How will the oxygen cylinder? If you have kept a person at home without doing anything, the most dangerous thing is, at least he can watch Amazon or Netflix for some good films. Adilio, if they watch some cruel stuff, okay, out of 10 stuffs, only 2 are watchable, 8 are scrappable. Okay, not movies, generally I'm saying this, what you call it as web series. Okay, 8 are watchable. People go crazy on this. I know that. I know. If I am going to say somebody that, do you know Leah in the serial? What is this? Why is your IQ so poor? I check. I don't like. No, your IQ is poor. Only if you like, your IQ is high. Otherwise, your IQ is poor. Okay. So imagine if a person is kept at home, this is how the mind will think. Okay. This is how this is possible. Okay. We all have experienced it. If we just for a minute, if we stop our pen or pencil or whatever we are doing and just stare at something without enjoying its beauty, our mind is worst. Okay. So idle mind is dangerous. So is idle asset. Income tax department will get wild if there is an idle asset. At least sell it, man, you will pay tax. At least let it out, man, you will pay tax. At least self-occupy, man, so that I can understand that some other place is not let out and there is, so at least give it as HRA, RFA. Why are you maintaining it as? So the law says you cannot keep it idle. I understand the real estate market is difficult, etc. I will allow 2 years. Within 2 years, either sell it or let it out. From the third year, I will take it as it has been deemed to have been let it out and tax it. The maximum period you can keep it idle, that is without getting any income, is 2 years from the date of construction. After that, it will be taken as if it has been let out and I will charge it. I will charge it to tax. Okay, 1 minute, friends. Two years from the end of the year in which it is constructed. Okay. Okay. Friends, property held as stock in trade. Where a property is held as stock in trade, NAV will be nil for a period of 2 years from the end of the year, in which construction is completed. So I completed, let us take or today 7/6/2020, I completed. From 31/3/21, 2 years. From the end of the year, another 2 years, which means it can be more than 24 months, it can remain idle. Okay. After that, it will become a let out property. Okay. Where a property is self-occupied, where a property is held as stock in trade, NAV will be nil for a period of 2 years from the end of the year in which construction is completed. Post that, the property will be deemed to have been let out. Post that, the property will be. After that, I will no more consider it as self-occupied. I will consider it as no more NAV will be nil. I will take it as deemed to have been let out. So I give you 2 years time either to sell the property or actually let out the property. Otherwise, I will take it as let out money. Subletting. Case 11. Subletting. What is subletting? Subletting is the owner gives it on rent to someone. The owner gives it on rent to someone, my dear friends. Please understand. Subletting means the owner gives it on rent to someone and he in turn let it out to another person. Okay. this is possible in the case of these bachelors, etc. One person takes the house, he finds the house is so big, so he finds another two persons to share the rent. So for the owner, it will be, he has let it out to me. So I find two other friends to stay, those two will pay me. Subletting. For me, the rent I receive from those two people is considered as income, not under IHP. Is considered as income, not under this chapter. Why it is not under this chapter? It is because I am not the owner of the property. This chapter taxes either the owner or deemed owner. Neither I am the owner nor the deemed owner. So whatever rent I receive from subletting of the property is taxable under other sources. I am not saying not at all taxable, not in this chapter. Okay. Let out by the tenant to some other persons is known as subletting. Let out by the tenant to some other persons is known as subletting. The rent received by the tenant is not taxable under this chapter as he is neither the owner nor the deemed owner of the property. Okay, the rent received by that tenant is not taxable under this chapter as the tenant is neither the owner nor the deemed owner of the property.
Subletting allowed.
Allowed. Owner oda permission oda sublet பண்ணலாம். Rent from subletting is taxable under income from other sources. Section 25A, arrears of rent and unrealized rent recovered. Section 25A, arrears of rent and unrealized rent recovered. Now, Ramkumar, what is arrears of rent?
Rent not paid.
Huh?
Rent not paid.
Rent not received or rent not paid. Okay. What is unrealized rent?
இனிமேதான் ரிசீவ் பண்ண போறோம்.
Yeah. Okay. So both are same.
இல்ல சார், இனிமே
Arrears of rent means we will not receive. Unrealized rent means we will receive. That's what is the difference.
Arrears of rent means it has been realized but has been not received. Unrealized means it has not been realized.
So offense is arrears of rent is realized but not received. Unrealized rent is neither realized nor received. ரொம்ப கன்ஃபியூசிங்கா இருக்குடா ராஜா. Okay, fine. Seemingly same terms, but lot of difference. Okay, so I want to tell you what is meant by unrealized rent. We already know rent due but not received. So in 1718 or in 1819, I have claimed unrealized rent. Now I get that rent back. The tenant now comes and pays. That year I claimed it as a deduction. Now I am recovering it. The tenant comes and pays to me now. Unrealized rent recovered. What is arrears of rent recovered? My dear friends, increase of rent with a retrospective effect. Today, 7th June 2020, the house owner comes to you and tells that he is increasing the rent by 2,000 per month, not from July, from 1st January 2020. He is increasing the rent not prospectively but retrospectively. So 1st January 2020, now that goes to 1920. When it is now, it comes to 2021. What arrears? If you accept to pay, if the tenant accepts to pay, it becomes taxable to the house owner in the year in which the tenant actually pays it. In the year in which the tenant actually pays it. Okay? Arrears of rent means increase in rent with a retrospective effect. Increase in rent with a retrospective effect. Unrealized rent recovered means deduction claimed and allowed earlier, now recovered. And okay, arrears of rent means increase in rent with a retrospective effect. Arrears of unrealized rent means deduction claimed and allowed earlier, now recovered. Both are taxable only in the year of receipt. Both are taxable only in the year of receipt. Both are taxable only in the year in which you actually receive it. 70% of the amount is taxable. Why? I will tell you in the next class. 70% of the amount is taxable. Am I clear to you? Am I clear to you? So friends, what are all we have studied so far? A general case, that is the 3 steps. Followed by that, we have studied 12 different cases. Actually, 11 different cases. The last is a section by itself. 11 different cases. Vacancy, unrealized rent, self-occupied, deemed to be self-occupied, partly let out, partly self-occupied in terms of period, partly let out, partly self-occupied in terms of units, property located outside India, composite rent, okay, property used for the purpose of own business or profession, property held as stock in trade, and subletting of property. Apart from that, we have studied one of the sections, that is arrears of rent and unrealized rent recovered. The word recovered means I have received it, then only it will become taxable. It's a section by itself.
Sir,
Raja.
ரெண்ட் வந்து டிக்ரீஸ் பண்றாங்க ரெட்ரோஸ்பெக்டிவ் எஃபெக்ட்டோட, அப்போ டாக்ஸ் திருப்பி கிடைக்குமா?
Current year they will reduce it. Current year you will reduce it. See, rent இப்ப reduce பண்ணானா என்ன பண்ணுவாங்க? If you technically look at it, 10,000 is the rent. I reduce it to 8,000. Now I will come and I will not give cash to the tenant. I will say, this month you are supposed to pay me 8,000. Adjust that 8,000, this 4 months rent of 8,000. Don't pay me any rent in this year. So when I compute for this year, it would have been reduced. It will not be allowed as a deduction or a refund.
Okay, sir.
Section 26. Joint ownership or co-ownership. Joint ownership or co-ownership. So, Mr. A and B together own a property. Mr. A and B together own a property. Where a property is owned by more than one person, then it is joint or co-ownership. Each owner can claim benefit of self-occupation. Each owner can claim benefit of self-occupation. Okay, it can be claimed for two properties where it is nil. The balance will be let out and the income will be divided in the hands of owner on the basis of capital contribution. The balance will be let out, but the most important is how will you tax the owners? You will tax it on the basis of, so total 1 crore property, one owner contributed 70 lakhs, another owner contributed 30 lakhs. The total income will be divided amongst the co-owners in the ratio of 7:3. So, these are all the ways in which our annual value will be computed. These are all the ways in which annual value will be computed. So, if I look at the baseline, it says annual value of a property consisting of land and building opportunity thereto, of which the assessee is the owner. So we know what is land and building opportunity thereto means. We know ownership, co-ownership, deemed ownership. Okay, and we also know annual value. Okay, annual value of a property consisting of land and building opportunity thereto, of which the assessee is the owner, after providing for deduction under section 24. After providing for deduction under section 24, that is the next part of the discussion. Two of our friends texted me saying that they need time to prepare for the mock test, the costing test, so don't have a very lengthy session of class. It becomes tired for us to prepare. I definitely respect that. Tuesday morning, we will be continuing that deduction under section 24. Okay, my dear friends, when we are going to complete the house property chapter, it's a very small chapter, on Tuesday morning, so that up to that will be the mock test syllabus. Up to that will be the mock test syllabus of our income tax. Up to that will be the mock test syllabus. So we will complete the chapter on Tuesday morning. On the salaries question, I have posted in the group the classwork in the Google Classroom. The number of people who submitted the assignment itself is very less. I take it as a positive step that you are all busy with your mock test preparation and mock test writing, so you are unable to submit it. So I will post the answers also today morning. Jagriti asked me, can you give us the answers for that homework questions or that assignment questions? I will give you the answers for those questions also. No, I'm unable to hear. So I'll give you the answers for those questions. I'll post it in the Google Classroom itself, the answers also, so that you can download it and keep it. Okay. So up to house property will be our mock test.